Yes, a very good morning to all of you. राइट तो अच्छा लग रहा है कि आजकल आप लोग मेरे YouTube चैनल पे आ रहे हो, वहां पे अलग अलग वीडियोस देख रहे हो और आपको वो वीडियोस बेनिफिशियल लग रहा है आपके एग्जाम प्रिपरेशन के लिए। तो मुझे कोई स्टूडेंट्स की रिक्वेस्ट आई कि मैम प्लीज जो ICAI ने MCQ का बुकलेट जो इशू किया है उसके ऊपर आप वीडियो बनाइए। तो मैं ठीक है, आप जो योर विश इज माई कमांड कि आप स्टूडेंट्स अगर बोल रहे हो कि मैम उसके ऊपर वीडियो बनाइए, तो आई एम मेकिंग दिस पर्टिकुलर video where I'll discuss those particular MCQ। बट मेरी अभी आपसे रिक्वेस्ट है कि प्लीज आप ये वीडियो जो मैंने बनाया है उसे देखिए, है ना। अगर आप मुझे रिक्वेस्ट करते हो कि मैम वीडियो बनाइए, तो मैं भी आपको रिक्वेस्ट कर सकती हूँ ना कि आप प्लीज ये पर्टिकुलर वीडियो देखिए, राइट, सो दैट आपको ज्यादा से ज्यादा कॉन्फिडेंस बिल्ड हो रिगार्डिंग दी सॉल्विंग ऑफ दी MCQs इन दी एग्जाम, है ना। और क्या होता है ना, जब भी हम MCQ पढ़ते हैं तो उससे हमें क्लैरिटी आती है कि सब्जेक्ट को कैसे अप्रोच करना है और एक कॉन्फिडेंस भी बिल्ड होता है रिगार्डिंग द सिलेक्शन ऑफ द आंसर्स। ओके, राइट। तो ऑब्वियसली मैं ये एंड में भी बोलूंगी, बट लेट मी ऑल्सो टेल इट एट द बिगिनिंग ऑफ द वीडियो दैट प्लीज लाइक, शेयर, सब्सक्राइब टू द आरती लाहोटी ऑडिट लर्निंग चैनल so that I can be a partner for your success for your audit paper। Okay, right, so again let us see कि कहाँ इसका कंटेंट है कि you go to the ICAI Board of Studies Knowledge Portal और वहां तुम्हें देखने मिलेगा राइट ये पर्टिकुलर केस सिनारियो का बुकलेट, राइट। सो केस सिनारियो बुकलेट और फिर यहाँ पे इंटरमीडिएट फाइनल एंड दी SPOM, राइट। सो एडवांस्ड ऑडिटिंग अश्योरेंस, राइट, दी प्रोफेशनल एथिक्स, राइट। तो ये पर्टिकुलर Jan 25 का बुकलेट, दिस इज 177 पेजेस और इसमें 35 केस स्टडीज ICAI ने डिस्कशन इनका इंक्लूडेड है, रेलिवेंट फॉर May 25 एग्जामिनेशन ऑनवर्ड्स, है ना। तो मई नवंबर नहीं, अब मई नवंबर नहीं, अब तो स्टोरी चेंज हो गया ना, जैन में सितंबर, है ना, जो भी 25, 26, 27, 28, है ना, जब तक ICAI नया कोई बुकलेट नहीं आता है, तो फॉर ऑल दोज फर्दर अटेम्प्ट्स ये पर्टिकुलर बुकलेट रेलेवेंट है। ओके, राइट। तो मैं एक्सपेक्ट करती हूँ कि ज्यादा से ज्यादा स्टूडेंट्स तक ये पर्टिकुलर US MCQ का कंटेंट पहुंचे। ओके, राइट। तो लेट अस बिगिन। ओके, राइट। सो मिन्सन लिमिटेड in South India is engaged in the business of spice oil extraction. The total paid up capital of the company is 9 crore. Details of the turnover and profit of the company for the last 3 years are given below. 22, 23, 24, 527, 300 and 104 crore. PBT 51 and minus 10.5. The company is using conventional methods for extraction of the oil from spices. This requires more human intervention and hence the cost of production is high as compared to the innovative method used by other new companies. Though the company had significant growth in the past years, it has not done well over the last 2 financial years due to competition. A new competitor, Natural Extracts Limited, had come in the market during 22 and by the end of 23, they captured around 75% of the market share by offering the product at a reduced price. They use new machinery which allows a whole range of automated extraction method, thus minimizing manual steps and reducing the cost of labor. In order to reduce the cost of production and thereby recapture the market, the management of Minson Limited has planned to erect a new plant with an automatic machine. The estimated cost of the plant and machinery is 90 lakh. The company approached Star Bank for a term loan of 80 lakh, which was to be repaid in 5 years. On 28 December 2023, the bank had sanctioned the loan and disbursed 40 lakh till 24. Minson Company appointed check chartered accountants as the auditors of the company at the AGM held on 18th of September 23 for a period of 5 years. As agreed, the audit team commenced their audit work for 24 in February 24 and completed the work by the end of May 24. The audit team submitted the following findings to the engagement partner. PX Limited, one of the material supplier, filed a case against the company on 23 for a compensation of 3 crore. The company had made an estimate for allowance of debtors at 5%. 70% of the value of the inventory was only covered in physical verification during 23 due to restriction on movement imposed by the state government. Company got a show cause notice from the State Pollution Control Board for the contravention of the provisions of the hazardous and waste management rules. 3 incidents of fraud notice, total 1.02 crore. Fraud committed by purchase uncle 85 lakh, accounts uncle 15 lakh and by cashier 2 lakh. Based on the above facts, answer the following MCQ. है ना। तो जो स्टूडेंट्स बोलते हैं कि नहीं मैम आपका कंटेंट हिंदी में होना चाहिए, कुछ बोलते हैं इंग्लिश होना चाहिए, कुछ बोलते हैं इंग्लिश होना चाहिए। तो जो भी मैं आगे की पीछे की बात करूं वो मे बी इंग्लिश या इंग्लिश में हो सकती है, बट ऑब्वियसली जब मुझे केस स्टडी पढ़ना है तो दैट तो आई हैव टू रीड इट इन इंग्लिश ओवर देयर। तो एज सच ये स्टूडेंट के लिए वीडियो है ना, पैन इंडिया स्टूडेंट्स के लिए रेलिवेंट है। Okay, so based on the above facts, answer the following MCQ. Multiple choice question. Though the company had significant growth in the past year, it has not done well over the last 2 financial year. As per 570, there are certain events or conditions that individually or collectively may cast a significant doubt. Oh my God, our favorite wordings from SA 570 about the going concern assumption. In order to assess whether Minson is a going concern or not, which of the following audit procedure should not be performed? ये ICAI की महिमा है कि इनको ये not वाले questions बड़े पसंद है। So इसमें से 3 procedure you will perform, 1 procedure you will not perform. Okay, right. So for checking going concern assumption, whether there are events or conditions which cast a significant doubt regarding the going concern of the entity, material uncertainty due to events or condition, which of the following procedure you will not perform? Analyze and discuss with the management of the company to find out whether installation of new plant and machinery would enable the company to reduce the cost of production. Discussion with the management. Inquire with the company legal counsel regarding the existence of dishum litigation and claim against the company, reasonableness of the management's estimate of assessment of their outcome and estimate of their financial implication, right? So company's legal counsel, inquire. Evaluating management's future plan and strategy to increase the market share of the product. So survival strategy, U-turn to be taken by the management. Analyze and discuss the company's cash flow and profit of the previous year with the projected account. So here they are taking one step backward. When you want to look into going concern, you have to look into the foreseeable future. So first one, you're making inquiry regarding how the new plant and machinery will reduce the cost of production. Then the litigation and claim, what will be the outcome and the estimate. What is the future plan and strategy of the management. So in these 3 points we are going forward, but in the last point we are coming backward. And a future cash flow, then that would have been right. But cash flow and profit of the previous year with the projected account. So this is the procedure we will not perform when we have to check for the going concern assumption. Okay. Right. Company has made an estimate for allowance of debtors at 5%. Some financial statement items cannot be measured precisely, but can only be estimated. The nature and reliability of information available to management to support the making of an accounting estimate varies widely, which thereby affects the degree of estimation uncertainty associated with the making of the accounting estimates. Examples of high estimation uncertainty, low estimation uncertainty in SA 540. Right. Please advise which among the following may have higher estimation uncertainty and higher risk as per SA 540. So high estimation uncertainty, high risk. So again, all the story writing over here, no relevance. All what is given in the case study regarding estimate allowance has been made at 5%, no relevance. They are asking a concept-based question from SA 540. Okay, out of the following, which is an example of the higher estimation uncertainty? Right. So judgment about the outcome of a pending dishum with PX Limited against the company. Estimates made for inventory obsolescence that are frequently made and updated. A model used to measure the accounting estimate is well known and the assumptions to the model are observable in the marketplace. Accounting estimates made for allowance for doubtful debts where the results of the auditor review of the similar accounting estimates in the prior period do not indicate substantial difference between the original accounting estimate and the actual outcome. If it indicates a substantial difference, then it is a high estimation uncertainty. So if it is frequently made and updated, then again this is an example of the low estimation uncertainty. The method used, the model used is well known and the assumptions are observable. Again, low estimation uncertainty. Because there is no difference between the original accounting estimate and the actual outcome of the prior period accounting estimate does not indicate a substantial difference. That is why again it is low estimation uncertainty. Had they said that there is a substantial difference, then we would have said that it's a high estimation uncertainty. That last year you predicted your bad debts to be 20 crore, actual came to 20 lakh. So that means there is a substantial difference. But here, what does it say? It does not indicate a substantial difference. Okay, right. So judgments about the outcome of a pending litigation with PX Limited against the company. Yes, that is an example of the high estimation uncertainty. Okay, yes. Question number 3. The company in the notes accompanying its financial statements disclose the existence of the suit filed against the company with full details. Based on the evidence obtained, it is necessary to draw user attention to the matter presented in the financial statement. Draw attention to a matter which is already there in the financial statements, emphasis of matter paragraph, right, which is not there in financial statements. Is related to audit, auditor's responsibility, auditor's report, then other matter paragraph. But related to financial statements, fundamental to users' understanding, emphasis of matter paragraph. By way of clear additional communication, as there is an uncertainty related to the future outcome of the litigation. In this situation, which of the following reporting option would be correct if the auditor is satisfied with the conclusion reached by the management that this matter is fundamental to the readers of the financial statements? Okay, include an emphasis of matter paragraph in the audit report having a clear reference to the matter being emphasized and issue a qualified opinion. We say our opinion not modified in respect of the matter being emphasized. So though emphasis is right, qualified is not right over there. Okay, right. Include in the basis for adverse opinion paragraph and issue an adverse opinion having a clear reference to the matter referred to in the notes to account. No basis for adverse. Include in the basis for disclaimer of opinion paragraph having a clear reference to the matter and issue a disclaimer of opinion. No. Include an emphasis. This has to be right because ABC have said no. So fingers crossed. Include an emphasis of matter paragraph in the audit report having a clear reference to the matter being emphasized and with relevant disclosures that fully describe the matter that can be found in the financial statements. So without modifying our attention, we draw attention to note number 19, which is related to so and so. Right? So emphasis of matter paragraph and a clear reference to the financial statements. Okay. Company got a show cause notice from the State Pollution Control Board as per SA 250. The auditor shall perform the audit procedures to help identify instances of non-compliance with the other laws and regulations that may have a material effect on the financial statements. As the audit team of the company became aware of information concerning an instance of the non-compliance with the law, what would not be the audit procedure to be performed? Oh my God. So which of the following is not the audit procedure to be performed as per SA 250 when you identify an instance of non-compliance with the other laws and regulation? Right? So when you come to know that there has been a non-compliance, understand the nature of the act, the circumstances in which it has occurred, and obtain further information to evaluate the possible effect on financial statements. Discuss the matter with the management, and if they do not provide the information and if the effect of non-compliance seems to be material, legal advice may be obtained. Monitoring the legal requirement and compliance with the code of conduct and ensuring that operating procedures are designed to assist in the prevention of non-compliance with law regulation and report accordingly. Evaluate the implications of the non-compliance in relation to the other aspects of the audit, including risk assessment and the reliability of written representation, and take appropriate action. Okay, right. So procedure number A, B, and D, it is related to non-compliance. And procedure number C, it is an audit procedure when you have to check whether the entity has complied with the laws and regulations or not. So first we perform procedures to check compliance with law regulation. After performing those procedures, we may come across a non-compliance. And once we come to know a non-compliance, then what are the audit procedures to be performed? In 250, we discussed two procedures: audit procedures to check compliance and audit procedures when non-compliance is identified or suspected. So when non-compliance is identified or suspected, A, B, and D. And to check whether laws and regulations have been complied, for there it is point number C. So that is not the procedure for non-compliance, that is the procedure for the compliance. So when you study these MCQs, does it also help you to prepare for the theory part of the paper? Yes. So if you require, at this point you can go to SA 250, see the procedures for compliance, see the procedures for non-compliance, and corroborate with what I am discussing over here, so that you can get the maximum benefit of this MCQ discussion. Okay, company had availed some loan for new plant and machinery during the year. Out of the total, I think some 40 lakh or something, they said the loan has been taken. Right, what does it say? The three instances, okay, right? So a term loan of 80 lakh, which would be repaid in 5 years. Okay, so estimated cost of plant and machinery was 90 lakh. Bank had sanctioned the loan and disbursed 40 lakh till 31st March 24. Okay, now what is the question? It says, okay, company had availed some amount of loan for a new plant and machinery during the year. Out of the total loan sanction, an amount of 25 lakh was earmarked purchase of the machinery oil extractor, but the company has acquired an improved model of the machinery, namely oil extractor with dryer instead. State which of the reporting option would be correct. Right? So what is the intended use, the purpose for which the money is to be applied? For the purchase of the machinery oil extractor, but instead of purchasing the original machine which they had planned, the company acquired an improved model of the machinery oil extractor with dryer instead. Right? So state the fact in Caro that out of the term loan taken for machine oil extractor, 25 lakh was not utilized for acquiring the machinery for which it was sanctioned. Ask the management to change the terms and conditions of the term loan as the company has acquired a different machinery. Report under Caro if management does not agree with the demand. State the fact in the Caro report that the term loan taken has been applied for the purpose for which it has been sanctioned. Right? So clause 9C of the Caro. State the fact in the Caro report that the term loan taken has not been applied for the purpose for which it was sanctioned. Also qualify the report as there are misstatements that are material but not pervasive. Right? So you said that you will take a particular model of the car and you took another model of the car. So that does not mean that term loan has not been applied for the purpose for which it has been obtained. Here they had taken the term loan for the purchase of the machinery oil extractor. They purchased a higher version of the same. So has it been applied for the purpose for which it has been obtained? Yes. Right? State the fact in the Caro report that the term loan has been applied for the purpose for which it was sanctioned. Oh my God, yes. So we have completed the first integrated case scenario over there, right? So 5 pages done, and then again they've given the explanation for the answers, right? So oh my God, 6 pages done out of 177. वैसे मैम कितने दिनों से मैंने सोचा था कि ये MCQ का बुकलेट करना है, आज तक हुआ नहीं. आज अभी आपका वीडियो देखना शुरू किया है ना, तो अभी हो गया, 17 मिनट्स इनिशियल, एक MCQ देख के हो गया. ऑब्वियसली मैंने इंट्रोडक्शन भी इंक्लूड किया ये 17 मिनट्स में. ओके, तो चलो आगे बढ़ते हैं. केस सिनेरियो 2. XY and associate chartered accountants have been appointed as auditors of ABC Enterprises, a company that obtained a license from the central government to promote cricket in the rural areas of India. So section 8. The company's average annual profit is estimated to be around 45 lakh. This profit would not be distributed as dividend to the shareholders, but it is to be applied towards the object of promoting cricket in the country. During the audit for 24, the following observations were made. Company did not maintain proper records for fixed assets valued at approximately 1.80 crore. So fixed assets, no maintaining proper records. Actually, it should come under clause 1AA of the Caro. Right? So whether the company is maintaining proper records, showing full particulars, including quantitative details and situation of PPE. But because this is a section 8 company, is Caro applicable? Caro not applicable. Okay, physical verification of the assets has not been conducted at regular interval. The last verification occurred on 31st August. Due to these observations, the auditor decided to report on the issues in the Caro, right? However, the management disagreed, arguing that the issue should not be reported. After discussion, XY and Associates ultimately decided not to report the issue. XY and Associates were also auditing QR Limited and ST Bank Limited. During the audit of QR, there was a difference of opinion between management and auditor regarding which of the matters should come under key audit matter as per 701. Effect of the significant transactions during the year under audit, areas of high risk as assessed and report management's expert. Just open the text of SA 701 and see determining key audit matters. Areas of higher assessed RMM and significant risk. There is no management expert over there. So they've done a drafting error. Significant auditor judgment related to financial areas that involve significant management judgment. Okay. Then, during the audit of ST Bank, a difference of opinion arose regarding the amount and item that should be disclosed under the head contingent liability. Additionally, the auditor made the following observation. 59 agricultural loan accounts guaranteed by the government of Uttar Pradesh amounting to 29 lakh were overdue for more than 2 years. So that is state government guaranteed advances to be treated as an NPA in the normal course. 73 agricultural loan accounts guaranteed by the government of India amounted to 25 lakh were overdue for more than 2 years. So here it says need not be treated as an NPA because it is central government guaranteed advances provided the guarantee is not repudiated when invoked. Sit straight, listen to me. Okay, 6 corporate loan accounts guaranteed 3 each by the government of Modi and the government of Yogi amounting to 25 each were overdue for more than 3.5 months. Due to their reputation for efficiency, XY and Associates were offered incorporation services for UV General Insurance Limited. A new company proposed to be set up with a paid up capital of 113 crore, of which preliminary expenses of 17 crore were included. The audit firm, after considering all the facts, decided not to take either of the assignment. Based on the above, answer the following questions. Okay. Right. Was the decision of XY and Associates not to report the issues of ABC Enterprises and Caro justified? If yes, under what reason? No, Caro is applicable to ABC, hence the matter must be reported under clause 1. Yes, Caro 20 is not applicable to ABC, hence the issue need not be reported. No, as per SA 240, the auditor must maintain professional skepticism, especially concerning issues related to fixed assets, and the issue must be reported. Oh my God. Yes, as per 320, the auditor may choose whether or not to report the issues after considering materiality. They have to make A, B, C, D. No, they can't only keep A and B option over there. Okay, yes, what is the total amount of loan which will be classified as NPA by ST Bank? Okay, right, so now first one, what does it say? 29 lakh for the government of Uttar Pradesh. Will it be classified as an NPA? Yes, it has to be classified as an NPA because it is overdue for more than 2 years. The exemption is not available for the state government guaranteed advances. Then what does it say? 73 agriculture guaranteed by the government of India. So then this is this an NPA for asset classification purpose? No. Yes, so not an NPA. Okay. And then it says 6 corporate loan accounts guaranteed 3 each by government of India and government of Uttar Pradesh. And so 3 each. So total 3 by government of India, 3 by government of Uttar Pradesh, amounting to 25 lakh each, were overdue for more than 3.5 months. Right. So again, state government, what does it say? That has to be treated as an NPA, but central government guaranteed advances, that need not be treated as an NPA, right? So 3 each of government of India, government of Uttar Pradesh, amounting to 25 lakh each. So 25 into 3, that is 75, right? So 25 into 3, that is coming to 75, right? So that is coming to 104 lakh. Right, that is coming to the 104 lakh. That is the amount of the NPA. Right, that is the amount of the NPA. Right, central government guaranteed advances need not be treated as an NPA, provided the guarantee is not repudiated when invoked, not cancelled when presented. Okay. Then, which of the following must be reported as a contingent liability for ST Bank Limited? A percentage of the total bills purchased by ST Bank, claims against the bank not acknowledged as debt, unpaid salary of 6 lakh to 6 employees of ST Bank who are currently involved in a court trial, and guarantees given by ST Bank on behalf of constituents located in Nepal. So which of the following must be reported as a contingent liability? Right? So where it is, uncertain whether the outcome payment of the same percentage of total bills purchased by the bank, it says it is a provision to be made. Claims against the bank, again, not acknowledged as debt, then it's a contingent liability. Here it is acknowledged as debt. Unpaid salary to 6 employees who are currently involved in the court trial, and guarantees given by ST Bank on behalf of the constituent. So guarantee is given is one of the example of the contingent liabilities in the bank audit chapter. Right? So guarantee is given on behalf of the constituents. Okay. And as per SA 701, communicating CAM in the audit report, which of the following areas should XY and Associates consider when determining key audit matters? Effect of significant transaction? Yes. Higher assessed risk? Yes. Second half reported by the management's experts. So plus minus minus. Significant auditor judgment involving areas of the significant management judgment. So it is 1 and 3, right? So 1 and 3, right? It would have been 1, 2 and 3 had there been no drafting error in the question, right? So here it comes to right? 1 and 3, that is option A. Right, so yes, that is the quick completion of our second case scenario over there. Okay, now coming to case scenario 3. Love and Kush are close friends and are into practice as sole proprietor. Both decided to expand their business on taking or expand their focus on taking up more assignments in the field of GST. On the back of the same, they both decided to conduct a joint training session for their client on GST and decided to share the total fee collected thereof. Okay, so joint training session. Right, so say let me go to the am I at the right place? Yeah, let me go to the ESB ICAI, right? So I come to committees and then I come to the committees, non-standing committees, and then ethical standard board of the ICAI. And then very important, I've also uploaded a separate video discussing these recent decisions of the ethical standard board. And you're, oh my God, I've come to it so quickly. It is permissible for 2 or more chartered accountants in practice collectively to have a joint training session for their clients on GST and share the fees collected from the clients thereof. So see, this is how they pick up a point and they put it in the case study and they ask the MCQ in the exam. Every single mark which you get in the exam is a result of blood and sweat. And it is somebody, you know the value of the 40, 60, 90, 93 marks that you get in audit. And All India rank 1, Rishabh Boswal, November 24, he got 93 marks in audit. Unbelievable. Okay, right. So anyway, so see over here, on the back of the same, they both decided to conduct a joint training session for their clients on GST. The total fee thereof allowed. Permitted. They invited another CA from their professional circle to join the initiative. However, the person declined the same, informing that this factor was against ethics and would lead to disciplinary action from ICAI. Nothing like that. The partner of SB and Associates is a close friend of CA Love. The firm was involved in an audit of a listed company which was required to submit the BRSR. The company audited was into thermal energy production business in India. They had submitted details about the total emission from its production outlet during the year and the detailed energy consumption plan for the future years. Right? So BRSR reporting, thermal energy production. They had submitted the details about their total emission from the production outlets and the detailed energy consumption plan that it had for the future years. Since Love had undergone a course on sustainability reporting, he was approached for getting advice on what needs to be reported in the BRSR of the company. As a gesture for helping the firm, the partner of the firm, right? So up to here, it's a question regarding BRSR. Right? So it mainly looks like Principle 7. Right, Principle 6, which is regarding the protection and restoration of the environment. Right, 7 is influence public and regulatory policy. So this is regarding the environment. As a result, for helping the firm, the partner of the firm suggested CA Love's name for the post of becoming a member of the board of the management of a KYC cooperative bank, a primary urban cooperative bank, and a client of SB Associates. Upon hearing the same, CA Kush requested Love not to take up the post as it would lead to the professional misconduct. Right, so board of management on the primary urban cooperative bank, right? Okay, here. Right. It is permissible for practicing CA holding a COP to become a member of the board of management in the primary urban cooperative bank. The ethical standard board noted that the position of the member on the board of management in the primary urban cooperative bank and the role attached to that position is similar to that of being a director simpliciter in a company where there is no involvement of a member in the day-to-day functioning operations and not signatory, and also filing and also for the and only sitting fees for the services rendered are provided. So one more question coming over there from the ESB, the Ethical Standard Board. Right. CA Love was acting as an internal auditor of NN Technology Private Limited. The company decided to raise more funds for expanding its business across the country by including the new age technology services such as AI. Love was observing the business model and the way in which the company was operating for quite some time, and he was keen on investing in the company. As a result, he decided to invest in the company shares and ended up acquiring 9.75% of the shares, total face value 4.7 lakh of the company during the financial year. So again, internal auditor, are they allowed to purchase the shares of the company? Yes, internal auditors, they are allowed to purchase the shares of the company, right? So yeah, let us try to find that point regarding the, this one. There is no prohibition for internal auditor of a company to acquire the shares of the company, to acquire purchase shares of the said company. Okay, CA Kush got to know about the information and he immediately urged CA Love to resign from being the internal auditor for the reason that internal auditor cannot hold any shares in the company and it would lead to professional misconduct and also failure to comply with the provisions of the Companies Act. Oh my God, they don't know anything about the ESB decisions and the recent decisions of the Ethical Standard Board. However, Love did not accept the argument of Kush and he said that nothing would happen because of him acquiring 9.75% shares in the company and continued to act as internal auditor. C. Kush was the auditor for BD Finance Private Limited, an NBFC headquartered in India. The company's treasury department had undergone changes in the recent past and the company current set of team members did not have much experience in handling the treasury function. Due to this situation, the company reached out to their auditor CA Kush, who was also into equity research advisory apart from being a CA in practice, to support the company and the member of its treasury department for a brief period by giving investment advisory services to ensure efficient utilization and management of the funds of the company. Before committing anything on the offer, CA Kush wanted to consult with CA Love as to whether the services requested by the NBFC can be performed by him. Okay, right? So can a CA in practice act as an equity research advisor? Oh yeah, a chartered accountant in practice. Keep your eyes open. Don't look here and there. किधर है ethics MCQ इधर देखो. Okay, in practice may be equity research advisor but he cannot publish a retail report as it would amount to other business or the occupation, right? As it would amount. So can he be an equity research advisor? Yes, but can he publish a retail report for the same? No. Based on the above. So one more regarding ESB. So you'll say, wow, ma'am, ye acha wala tha. Like this MCQ? You don't have to like anything. You simply have to give the correct answer. What you have to do, you should get the correct answer and the marks in the exam. But yeah, certainly this is a good one. Whether the act of conducting a joint training session on GST by CA Love and Kush and sharing of the total fees, yes, lead to professional misconduct. Yes, as per 211, pays or allows or agrees to pay or allow. Yes, Love and Kush will be guilty for conducting the joint session as per part 4 of the first schedule, bringing disrepute to the profession. Yes, this is a case of solicitation of client whereby CA Love can influence clients of CA Kush and vice versa. Hence, the conduct of joint training session will be guilty under 611, solicits. No, as per the students who have watched the lecture of Aarti ma'am regarding the recent decisions of the Ethical Standard Board, it is permissible for 2 or more CAs in practice collectively to have the joint training session for their clients on GST and share the fee collected from the clients thereof. Okay, with regard to the BRSR reporting on the data of the total emission and the future energy consumption plans for the company, how do you treat them? Right? The details of the emission form part of the essential indicator and needs to be mandatorily disclosed. The future consumption plan, the plan for future consumption is only a leadership indicator and it is considered as an optional disclosure. Both the details of the emission and the future energy consumption, right? So emission and the future energy consumption form parts of the essential indicators and needs to be mandatorily disclosed. Details of emission are a leadership indicator and considered as optional disclosure, whereas the plan for future energy consumption is an essential indicator and needs to be mandatorily disclosed. So it's vice versa of point A, and both the details are the leadership indicator. So it says both are essential, both are leadership indicator, and then vice versa. Right, so obviously whatever is your current energy consumption, that is the essential indicator, and whatever is your plan for the future, that is leadership indicator, which is an optional disclosure, right, which is an optional disclosure. The futuristic plan which the company has for energy consumption can be categorized under which principle of the NGRBC, right? So again, I have uploaded a video on my YouTube channel discussing the 9 principles of the BRSR. Gaddi, you remember, man nikla o gaddi leke kaun kaun si gaddi? Creta. In the Creta, ETA. So ethics, transparency, accountability. Then safe and sustainable goods and services, right? So you put gas in the gaddi, right? So ETA and then goods and services. Then you think about your employees, your stakeholders, human rights. Then the environment. Then be the change you want to be. So influence public and regulatory policy. Then inclusive growth and the equitable development. And finally, value to the consumer in a responsible manner, right? Value to the consumer. So 5, then environment, then policy, inclusive growth, and then finally you have the value to the consumer, right? So what does it say? Energy consumption can be categorized under which principle of NGRBC? Is it ETA? Is it environment? Is it respect for stakeholder interest and responsiveness? Or is it influence public and regulatory policy? Obviously, energy, emission, consumption, all that comes under the environment. So protection and restoration of the environment. Okay. By accepting the offer to become a member on the board of the management of the KYC Cooperative Bank, do you think that CA Love would be held guilty of professional misconduct? Yes, as per 1111, engages in any other business or occupation without the permission. It is permissible for a member for a CA in practice to become a member on the board of management in the primary rural cooperative bank. Hence, Love would be guilty if he accepts the offer. It is permissible for a CA in practice to become a board on the management in the primary urban cooperative bank. So that is why micro reading is required. Hence, Love would not be guilty of misconduct if he accepts the offer. And Love would be guilty under part 3, other misconduct in relation to members of institute, imprisonment for more than 6 months. No, nothing like that. Right? So it is permissible for CA in practice to become a member on the board of management in the urban cooperative bank, when CA would not be held and CA would not be held guilty. In the given case, it is mentioned that CA Kush is a practicing chartered accountant and is also engaged in equity research advisor. Do you think that Kush will be guilty of professional misconduct as per the provision? No CA in practice may be an equity research advisor, but he cannot publish the retail report, as that would amount to other business occupation. Thus, if Kush doesn't publish the retail report, he will not be held guilty. As per 1111, he is engaged in other business occupation without permission. No, a CA in practice cannot be an equity research advisor for his existing clients. Hence, Kush will be guilty. As per 1111, read with part 3 of second schedule, kuch bhi guilty for misconduct for engaging in other business occupation without the permission of the ICAI. Nothing like that. We go with the knowledge. What is the knowledge? A CA in practice may be an equity research advisor, but he cannot publish the retail report. Thus, if Kush doesn't publish any retail report, he will not be held guilty of the professional misconduct. Okay, right? So that's the discussion for the case scenario number 3. Okay, right. So how many pages? Oh my God, 16 pages. And now we've reached to like 36 minutes of the video. Amazing. Super. Case scenario 4. ANS in a appointed as statutory auditor of Delco Limited listed company referred to as company for 24. Delco Limited deals in the manufacturing of shoes. During the audit, the auditor found out that the company has acquired 2 subsidiaries, namely Sole Limited dealing in the manufacturing of shoe soles and Soccer Limited dealing in the manufacturing of kid shoes. The auditor of Sole Limited and Soccer Limited are XYZ and Associates, right? So they have been appointed as auditors of Delco. Company acquired 2 subsidiaries, Sole Limited and Soccer Limited, and the auditors of Sole and Soccer are XYZ. Delco Limited has prepared the CFS under Ind AS and consolidated the financial statements of subsidiary Sole Limited during the current year. However, the company has not consolidated the financial statements of Soccer, which has also been acquired during the year, as the company has not yet been able to ascertain the fair value of the certain assets and liabilities of Soccer on the acquisition date. So, non-consolidation of material subsidiary, again a case study question in your group audit chapter. Okay, this acquisition is accounted for as investments in the books of Delco Limited. Had the company consolidated the financial statements of both the subsidiary, there would have been material impact on the important element of the financial statements. At the time of finalization of the audit report of the company for 24, the auditors are considering their reporting responsibility for the non-consolidation of financial statements. So qualified or adverse depending on pervasiveness, non-consolidation. So this is case study converted into the avatar of an MCQ question. Okay, auditor asked the management to disclose their reason for the non-consolidation in the notes to account. Also, the financial statements of Delco for current financial year include the corresponding figure without consolidation of the previous year. The auditors are also considering the on their responsibilities and the management's responsibility with respect to financial statements and the audit of such financial statements. Based on the above facts, answer the following. With respect to the non-consolidation of the financial statements of soccer with the financial statements of the Delco, how should the auditor deal with the same in their audit report? Auditor should give a disclaimer. Disclaimer you give when you're unable to obtain the evidence. Auditor should give an adverse opinion if the impact material and pervasive. Auditor should mention the fact and emphasis of matter paragraph. Auditor should mention the fact and other matter. Oh my God, they've made our life easy. Auditor should give an adverse opinion if the impact is material and pervasive. Please go to the question bank, whichever author book you have for group audit, and see this question over there regarding the non-consolidation of subsidiary. There is a drafting question which comes in the exam regarding the adverse opinion and the basis for adverse opinion. Right? So drafting you must study. That's an important aspect of your study for CA final, drafting of the types of modified opinion. Okay, with respect to the corresponding figures of 22-23 in the current year financial statement, what are the auditor's responsibility for the same, right? So corresponding figure, SA 710. What does it say? The auditor's opinion should refer to each period for which the financial statements are presented. Corresponding figure, it's not comparative financial statements. Auditor need to report on the financials only, be it comparative or corresponding figure? No. The auditor's opinion shall not refer to the corresponding figure except if the previous period audit report is other than an unmodified opinion, or that auditor has obtained the sufficient evidence that material exists in the financial statements for the prior period which was not addressed earlier. The auditor has no report responsibility for the financial statements of any year other than the current financial year for which they have been appointed. No, we have an SA 710 for comparative information. Right? So it says auditor needs to report on the current only if it is only, be it comparative, corresponding? No. Auditor always needs to refer to each of the period? No. You always don't need to refer to each of the period. Auditor's opinion shall not refer to the corresponding figure unless and until it is an opinion other than unqualified and or the auditor has obtained evidence that there is a material misstatement which was not addressed earlier. What is the reporting responsibility of the auditor in case the prior period financial statements are not audited? Not audited, other matter paragraph. Okay, prior period figures are unaudited. So the auditor needs to report the matter under key audit matter? No. Auditor needs to report such matter in the other matter paragraph in his report? Yes. Even though if he mentions this in the other matter paragraph, he will be responsible to obtain evidence that opening balances do not contain any material misstatement. Yes, SA 710 of 510 initial audit engagements, opening balances. So both B and C. Right, so what is it over there? Both B and C. Okay, right. So auditor has to put it in the other matter and has to obtain sufficient appropriate evidence for the opening balances. Preparing the financial statements in accordance with AFRF is the responsibility of the management of Delco Limited. Which of the following is correct in regard to the disclosure of such management responsibility? This is implied responsibility of management and it is presumed in an audit of financial statement. Therefore, it need not be specifically mentioned anywhere. Kuch bhi. Management may undertake to accept such a responsibility through an engagement letter itself. So management issue engagement letter. Audit report should describe the management's responsibility in a section with the heading responsibilities of management for financial statements. Auditor's report should refer to the responsibilities of auditor and not that of the management, as the same is obvious. Obviously, I will not take this point. Right, so engagement letter, no. Need not be specifically mentioned, no. Audit report should describe the management's responsibility in a section with the heading responsibilities of management for financial statements. If the auditor of Delco decided to give a qualified or adverse opinion in the current year with respect to the non-consolidation of the financial statements of soccer, which of the following is true with regard to the use of emphasis of matter for matter? So you're giving qualified adverse due to non-consolidation of subsidiary, but now you're also giving an emphasis of some other matter. What is true? Auditor cannot add an EOM in his report on any matter as qualified adverse opinion is given on the matter. EOM matter can be added if the auditor's opinion is neither qualified nor adverse in respect to that particular matter and the matter is fundamental to the user's understanding of financial statements. EOM on any matter can be added in the audit report even if the report is qualified adverse with respect to that particular matter. EOM indicates that the audit opinion is modified in respect of the matter emphasized. No, that the auditor's opinion is not modified in respect of the matter being emphasized. Okay, auditor cannot add EOM when there is qualified or adverse? No. Whenever there is qualified adverse for another matter, can you put an EOM? Yes. So A and D out of question. Now let us check between B and C. What does it say? EOM on a matter can be added if the audit opinion is not qualified adverse for that particular other matter, but the matter is fundamental. Right? So what does it say? For that other matter, if it is fundamental to the user's understanding. So other matter means any other matter. Don't take it 706 other matter. And there are many matters in the audit report. So for one non-consolidation of subsidiary, you've issued qualified or adverse. Now a matter which is fundamental to the user's understanding. Can you put the emphasis of matter? Yes. EOM on any matter can be added in the audit report even if the report is qualified. No. So if qualified adverse, then you cannot issue the emphasis of matter. What do we say? Our opinion is not modified in respect of the matter being emphasized. So for the non-consolidation of the subsidiary, qualified opinion, adverse opinion. Some other matter which is not a matter of the modification, but it is fundamental to the understanding, that you can put it in your audit report under the emphasis of matter paragraph. And just as a checkpoint, if this particular concept which I am using over here and I am telling you that this is the correct answer and you are not able to make sense and it is seeming to be confusing for you, that's a clear indication that you have not studied the subject well. It's a clear litmus test. अगर ये तुम्हें पल्ले नहीं पड़ रहा है, अगर ये तुम्हें नहीं समझ रहा है, क्योंकि अगर तुमने पढ़ा है तो ये समझना ही चाहिए. तुम बोलते मैम आपने पकड़ लिया हमको. एग्जैक्टली. ओके राइट. सो एनीवेज अभी भी पेपर नहीं, अभी तक एग्जाम लिखने को टाइम है तो अभी भी पढ़ लो, है ना. 700 सीरीज ठीक से पढ़ लो. ठीक है. The management discloses the fact of the non-consolidation of financial statements in the notes to account of the current year. What will be the impact on the audit report? The disclosure in the notes to account is the responsibility of the management. As such, it will not have an impact on the audit opinion in the present case. Auditor can ignore the issue of non-consolidation as management has taken responsibility of the same by disclosing the facts in the notes to account. Auditor should give an unmodified opinion with disclosure of the fact in the other matter paragraph. Auditor cannot give an adverse or a qualified opinion in this case as the management has disclosed the reason for such non-consolidation in the notes to account. No, because there is a particular subsidiary जिसको consolidate करना चाहिए था, consolidate नहीं किया है. So your financial statements are not giving a true and fair view. So they have to give an adverse opinion. So what does it say? It will not impact the auditor's opinion in the present case. Right? Second, it says can issue of non-consolidation as management has taken responsibility? No, financial statements are not giving a true and fair view. Auditor should give an unmodified with other matter? No. Auditor cannot give an adverse or qualified in this case as management has disclosed the reason? No, we will still give a qualified or adverse opinion depending on the pervasiveness. Okay, right. So that is our discussion for the case scenario number 4. Now coming to case scenario 5. Kranti Bank Limited was having 150 branches all over India by 24. 10 branches of the bank were already covered for concurrent audit and the bank's audit committee decided to include the below mentioned branches for concurrent audit for 24. Muradabad branch where foreign exchange business was done from December 23. Ludhiana branch where aggregate deposits were more than 45% of the total deposits of the bank. Mumbai branch with deals in treasury functions like investments and interbank borrowing but not in bill rate discount. Mishti and Associates CA were appointed as the stock auditors by the Bank Audit Committee for 23-24. The bank's management had appointed and fixed the remuneration of Mishti and Associates Chartered Accountants as the auditor for 23-24. Right? So they were the stock auditors and now they were also appointed as the as statutory auditors for 23-24 for the same 10 branches for which they were given the assignment of the stock audit? No. At the Kerala branch of the bank, there were high value cash deposits in one of the current account during June 23. Your firm has been appointed as the concurrent auditor for the Kerala branch for 23-24. So concurrent auditor, the cash collected by the branch was remitted to the currency chest on the very same day, but during the concurrent audit for April 23 itself, the auditor noticed that the branch was unable to show the intimation sent via email to currency chest for the cash remittance. Based on the above facts, answer the following question. Mishti and Associate Chartered Accountants were already appointed for stock audit by the audit committee for the 10 branches. So this is also there in the ESB. So whether Mishti and Associate Chartered Accountant are authorized to accept the appointment as statutory audit for the same branches, select the correct option from the following. Mishti and Associates can accept the appointment as they are already appointed for the stock audit as those branches by audit committee, so they can accept. Mishti and Associate Chartered Accountant can accept the appointment as they've been appointed as statutory auditor for the same 10 branches which were for which they were conducting stock audit. Mishti and Associate Chartered Accountant cannot accept the appointment as the audit firm should not undertake statutory audit assignment when they are associated with internal assignments in the bank during the same year. Again, ESB, Ethical Standard Board decision. Mishti and Associate Chartered Accountant cannot accept the appointment as it was not offered by the audit committee and the bank's management is not authorized to appoint the auditor. Kuch bhi. And so Mishti and Associates cannot accept the appointment. So can accept. Cannot accept the appointment as the audit firm should not undertake statutory audit assignment while they are associated with the internal assignments in the bank during the same year. Okay, whether the bank's management is authorized to appoint and fix the remuneration of the statutory auditor without consulting the audit committee of the board of directors or the members in the general meeting, select the correct option from the following. Bank's management can appoint and fix the remuneration of the statutory auditors only in consultation with the audit committee of the board of directors. Mishti and Associate Chartered Accountant were already appointed for stock audit. Therefore, only audit committee was authorized to appoint or fix their remuneration as statutory auditors. Mishti and Associate Chartered Accountants were already appointed for stock audit. So the bank's management, so here it says only audit committee. Now it says the bank's management is authorized to appoint the same firm as statutory auditor without consulting the audit committee or the members in general meeting. Bank's management cannot appoint or fix the remuneration of the statutory auditor unless the same is passed by a resolution in the AGM of the bank. Right? So what does it say? Only in consultation with audit committee. It says audit committee was authorized, and here also it says authorized to, the bank management is authorized without consulting the audit committee. It says nothing doing. It is only unless the same has been passed by a resolution in the AGM of the bank. Okay, you have been asked by your senior to verify the high value cash deposits at the Kerala branch, concurrent auditor. What parameters, documents will you verify as the concurrent auditor of the branch? Select the correct option from the following. Concurrent auditor has to verify the details of cash remittance to currency chest only. You need to verify the KYC documents of the customer and the reason for high value cash deposit in the account, like nature of business or sale of property. Verify the KYC documents of the account in which the cash is deposited. Verify the reason for the high value cash deposit in the account, like nature of business transaction. Verify the discrepancy found in the cash of the customers and ensure that records of currency chest remittance are maintained properly. As a concurrent auditor, you need to verify the reason for regular cash deposits in the account or nature of discrepancy, if any, found in the cash deposited by the customer, right? So you don't only have to look into the discrepancy. Verify KYC document, details of cash remittance. No, this is the entire set of the audit procedure to be performed. Verify the KYC document, reasons for high value cash deposit, discrepancy noted, and the records for the currency chest, are they maintained properly, right? So full audit procedure. Okay, how the discrepancy of not preserving the intimations of cash remittances to currency chest by Kerala branch of the bank should be dealt by the concurrent auditor in his report, right? So not preserving the intimations of cash remittances, right? So auditor should report the matter as a major irregularity in his audit report to the management. The auditor should discuss the importance of preserving the hard soft copy of the email sent for cash remittance with the branch manager and check for its compliance in the next audit period. Auditor should verify the details from email sent to currency chest and close the matter. We close this point. As it's a minor irregularity, auditor can ignore. We'll ignore this point. So whether it's a major irregularity or a minor irregularity, it is a minor irregularity. So discuss it with the branch manager and check for its compliance in the next audit period. Do a fine reading of the concurrent audit or reporting by concurrent auditor. You'll be able to correlate this content over here. When I say it, you need to do it. I'm giving you tips regarding bits and pieces to be studied here and there. Okay, right. So, oh my God, that completes our discussion for the MCQ case scenario number 5. Coming to number 6. Comtech Limited, a top 1000 listed company on the BSE by market capitalization for the past 2 years, sells IT and related equipment directly to consumers through its websites. One day, the CFO of the company received a video call from the managing director instructing him to transfer 90 lakh to the bank account of Next Limited. When questioned by the CFO, the managing director explained Next products are fast moving and contribute 30% of the company revenue. The amount of payment is within the approved limit and can be easily remitted without any further approval. Satisfied with the explanation, the CFO made the necessary transfer. At the end of the month, while preparing the BRS, the CFO realized that 5 incremental payments of 90 lakh each had been made to Next Limited. These payments were unreconciled and do not have any corresponding entry in the books of account. The CFO explained the situation to the MD, reminding him about the video call that had instructed him to make such payment. However, the MD denied making any such video call. So the MD who had come on the video call was the fake MD. And so it's a cyber attack over here. Right? So this is a real life scenario where they are putting it nowadays in many of the case studies. You say, oh, the MD of the company gave the instruction to make the payment and that's why the CFO made the payment. Later on, you come to know that the MD never had done such video call or never told to make such payment. Right? So it's a disguise. Okay. CFO and managing director engaged a forensic expert who observed that the company had cyber attack using sophisticated AI tools. Investigation further revealed that the video call to the CFO was fake and made from the laptop not owned by the company. Hackers have gained access to the CFO laptop and have obtained bank details and its authorization information. Company filed a police complaint and reported the incident to the appropriate authority. During the risk assessment process, the auditors of the company determined that the IT environment possesses significant risk. Right? The IT environment possesses a significant risk. The auditor assessed that the principal financial systems used in the preparation of financial systems were compromised during the cyber attack. Right? So just as there is a heart attack, here it's a computer attack, right? Cyber attack. The auditor also focused on the judgments made by the management related to the known security incidents. Auditor made inquiries with the risk management team and the CEO, CIO, the Chief Information Officer, to understand the assessment of the cyber security risk and the measures in place to mitigate this risk, focusing on the principal financial systems used in the preparation of financial statements. Auditor also communicated with TCWG about the cyber incident. तो पूरे audit को हिला दिया ये एक cyber incident ने. After completion of the necessary procedure, auditor felt that it incurred additional efforts to the tune of 20%. So it's a matter which gave most significance and so unexpected effort. Auditor reviewed with the assistance of specialists management's assessment of the potential impact of the principal financial systems used in the preparation of financial statements. Management of the company was impressed by diligence employed by the auditor while dealing with the cybersecurity incident. They particularly appreciated the in-depth knowledge of the auditor, timely involvement of IT specialists by the auditor, and the experience in dealing with cybersecurity experts. The management felt that the auditor would be right fit for conducting a thorough audit of the IT system of the company. In order to leverage the auditor's expertise, the management proposed to engage the auditor to conduct a system audit. No, maker, checker, statutory auditor. Okay, the stakeholders of the company believe that integrated reporting, Fishman, 6 C's, and financial capital, intellectual capital, social capital, human capital, manufactured capital, natural capital, as prescribed by the IIRC, should be prepared by the management. The primary purpose was to explain to the providers of financial capital how the company creates, preserves, erodes value over time. The integrated report would provide relevant information, both financial and other, for the benefits of all the stakeholders interested in the company's ability to create value over time, including employees, customers, supplier, business partner, local community, legislators, regulators, and policymakers. Based on the above facts, answer the following question. In the given case, cyber attack encountered by the company is known as spoofing, denial of service, malware, or identity-based attack. Right? So denial of service, wherein a lot of false requests are sent to a computer system. No. Malware, when your computer is encrypted and for a ransom they are ready to decrypt it for you. So it's not that. So spoofing, or whether it is the identity-based attack. Right? So identity-based attack, wherein you're providing your details, personal data or so, and spoofing, wherein it is the email spoofing or the domain spoofing over there. Right? So what has happened in this case is the spoofing, right? So wherein it is the domain spoofing, wherein you feel that the details have been obtained, right? So spoofing or the identity-based attack, right? So if you look at the answers, it also more looks like the identity-based attack, because you think that the information has been obtained from, instructions have been received from the MD of the company, right? So it says spoofing is when someone or something pretends to be something else in an attempt to gain confidence, get access to the system, steal data, steal money, or spread malware. Spoofing attacks come in various forms, including the facial spoofing. So we study about email spoofing, domain spoofing. Here we are taking an example of the facial spoofing. So what is the correct option over there? It is the spoofing. Okay, right? So B, C not there. Then out of A and D, it is the A, which is spoofing. The engagement partner is confused as to whether the audit report would be impacted by the cyber attack instance. What is the most appropriate reporting implication? No implication in the audit report, since the financial loss has already been recognized in the financial statements. Qualify audit opinion as the amount of loss due to cyber attack is incremental and does not emanate from its operating activity. No qualified. Include an emphasis of matter paragraph as cyber security incidents are of default fundamental to the attention of the users. No. Report as a key audit matter, since the cyber incident was of most significance in the audit of the financial statements of the current period. So no implication, no. Report it as a key audit matter. Right? So what does it say? You need to report it as a key audit matter. Okay, company wants to prepare an integrated reporting as contained in the International Integrated Reporting Council and endorsed by SEBI. The company secretary is of the view that integrated reporting is mandatory for a listed company. Which of the following is correct in this regard? Right, the view of the company secretary is correct, since the company meets the threshold of top 1,000 listed companies based on market capitalization. The view of company secretary is voluntary for the top 500 listed companies, right? Then the view of company secretary is correct, as the company meets the threshold, top 1,000 listed entities by market capitalization as at the end of the current year. The view of company secretary is incorrect, since integrated reporting is voluntary for the top 1,000 listed entities, right? So what are the options given over here? It says top 1,000, top 500, and then whether it is mandatory or voluntary, right? So top 500, top 1,000, top 500, right? So top 1,000, 1,000, 1,000, and then it says 500, 500, and 500. It says company meets the threshold of the previous year. Here it says the company meets the threshold for the current year, and it says it is voluntary, and here again it says it is voluntary. Okay, right? So integrated reporting, if I put it over here on the Google, right? Integrated reporting applicability Indian companies. Okay, right? So what does it say? Top listed companies which are required to prepare the BRSR. Integrated reporting is not mandatory for all companies. Obviously, in exams, you cannot do such Google search, but it is strongly encouraged. So it is voluntary for the top 500 listed companies that are required to prepare the BRSR. Okay, right? So the view of the company secretary is incorrect, as integrated reporting is voluntary for the top 500 listed entities. It is voluntary for the top 500 listed entities. Okay, right. Integrated reporting comprises of 6 categories of capital. Fishman, right? The company observed that it has capitalized the intangible assets, right? So capitalize the intangible assets, that is their patent and rooftop solar equipment balance sheet. In the integrated reporting, patents and solar equipment should be disclosed as, right? So if you have a patent, obviously that patent is going to be your intellectual capital, and obviously solar equipment, that is your natural capital, right? So only one meets the criteria, like patent comes as intellectual capital, that is sure. So obviously other has to be the balancing figure, because patent cannot be financial, natural or human. So that is the C option over there. Right. Can the auditor accept the system audit assignment as offered by Comtech Limited? Yes, the statutory auditor can accept the assignment of system audit provided it does not involve any scrutiny review of financial statement data and information. Yes, statutory auditor can accept the assignment provided it involves scrutiny review of financial data. So if it involves scrutiny review of financial data, we cannot. Yes, statutory auditor can accept the system audit provided the fee for system audit is not more than audit fee. And no, the statutory auditor cannot accept the assignment of system audit since it did not involve any scrutiny of financial data. That means had it involved scrutiny of financial data, then we would have accepted. So we cannot take this point. Yes, statutory auditor can accept provide the fee for system audit is not more than the audit fee. So yeah, that audit fee condition comes later. But what is the first condition? Provided it does not involve the scrutiny of financial data and information. Because financial data information, then your maker checker 412 substantial interest, you cannot express opinion, right? So can accept the assignment of the system audit provided it does not involve any scrutiny review of the financial data information, right? So what is the correct option over here? It is the A is the correct option. Okay, right. So it says key audit matter, then the company secretary is incorrect as integrated reporting. SEBI circular provides that integrated reporting may be adopted on a voluntary basis by top 500 companies, intellectual capital, organization, then the natural capital. And yes, the statutory auditor, in case any scrutiny review of financial data information is not involved, then the statutory auditor can accept the assignment of the system audit of the same entity subject to the requirement. Okay. Let us come to case scenario 7. JKL and Associate Chartered Accountant were acting as the auditor of IBS Bank. During the audit for financial year, the following observations were made. Is interest income included the following? Interest income. 5 lakh related to short-term crop loan where installment was overdue for 1 crop season. Right? So short duration crop overdue for more than 2 crop season. Here it is overdue only for 1 crop season. So is it an NPA? No, it is not an NPA. So income can be recognized on the accrual basis. So it includes this. 7 lakh related to an advance guaranteed equally by Government of India and Government of Tamil Nadu, where the installment was due for more than 6 months, right? So overdue for more than 6 months. And now that central government guaranteed advances, and now that exemption is only for the asset classification. That exemption is not for the income recognition. So for income recognition purpose, it is to be treated as an NPA. Okay. A 25-month-old NPA account worth 43 lakh net book value was sold to an asset reconstruction company for 45 lakh. That means you've sold your NPA for a profit of 2 lakh. The profit from the above transaction was taken to P&L. No. The above NPA was sold without recourse. Wonderful. And at cash basis. Amazing. Auditor noticed a discrepancy in the transaction. The profit has been booked to the P&L and hence decided to report the same. After completing the bank audit, JKL and Associates agreed to take up the following consultancy for one of the startup company based in Noida. Setting up executive incentive plan and wage incentive plan included in the list of MCOS. Price fixation and other management decision making included in the list of MCOS. You can go and check it in the list of MCOS. Conduct a periodical audit and advisor for tax matter. No, that is not included in the list of the MCOS. Okay, one of the partners of the firm felt that providing the above services could result in professional misconduct. Hence, he resigned from the partnership and became a sole proprietor. One of the clients of JKL and Associates came to know about the issue and hence they approached K to conduct the statutory audit for the financial year. K took up the assignment without informing the previous firm. Annoyed by this, J filed a complaint to ICAI regarding the act of K. After inquiry, it was decided that K was guilty of misconduct. After this incident, K also filed a complaint against Mr. J. When he was thinking about a reason for the same, he remembered that J had entered into an agreement with 2 of his articles to pay stipend on an annual basis, while others were paid on a monthly basis. Contravenes. 221. at clause 122, clause 1 part 2 second schedule, realizing that this act is the violation of regulation 48, right? So clause 1 part 2 second schedule contravenes. He filed a complaint to ICAI. After inquiry, it was found that J was guilty, so they are doing tit for tat. Based on the above facts, answer the following question. From the above facts in detail, what is the correct amount of interest which the bank should have accounted for in its financial statement, right? What is the correct amount of the interest bank should have accounted for in its financial statements? Okay, right. So now what is the correct amount of which the bank should have accounted for in its financial statements? Okay, right. So one, it says 5 lakh related to short-term crop loan where installment was overdue for 1 crop season. For short-term crop loan, what do we say? It is to be treated as an NPA when it is overdue for more than 2 crop season. So right now, is it an NPA? No. So income recognition can be done on the accrual basis. So that is why it is 5 lakh. Can it be taken to income account? Yes. 7 lakh related to guaranteed by Government of India, Government of Tamil Nadu, where the installment was overdue for more than 6 months. Right. So now 3.5 lakh is of Government of India, 3.5 lakh is of Government of Tamil Nadu. So 3.5 lakh is an, what do you say, the Government of India part, that is the NPA, not an NPA. And which is for the Tamil Nadu government, it says that is an NPA because it is overdue for more than the 6 months. But this NPA, not NPA, that in central government guaranteed advances, that exemption is only to be applied for the asset classification, not for the purpose of the income recognition. For income recognition purpose, both of this have to be treated as an NPA, wherein we say, no, central government guaranteed advances, though they are overdue, they need not be treated as an NPA. But for income recognition purpose, they will be treated as an NPA, right? So for income recognition purpose, is this both India and Tamil Nadu NPA? Yes. So should this 7 lakh be taken as your interest income? No, it should not be taken as interest income on accrual basis. It should be taken to interest income on the cash basis, on the realization basis, actual basis. Okay, right. So from the above facts, what is the correct amount of interest which the bank should account for? One, it says no income to be accounted for, right? Second, it says 8.5 lakh, that is the 5 lakh and plus 5 lakh of the short duration crop and 3.5 lakh of the government of Tamil Nadu, because it says India, it should be exempted. No, because that is only applicable for the asset classification. For income recognition, no, right? Then only 3.5 lakh, no, it says it is the 5 lakh, right? Why 5 lakh? Because only that is your income that you can accrue for it on the accrual basis. Why? Because it is not an NPA. Whereas this one, it is an NPA for the purpose of the income recognition. So is it to be accrued as income? No, you'll take it to income only on the cash basis. Okay. Right. What could be the possible amount classified as NPA related to the accounts with respect to the observation regarding the inclusion of interest income given above? 5 lakh related to the short-term crop loan where it is overdue for more than 1 crop season, and 7 lakh related to the advance guaranteed by the Government of India and the Government of Tamil Nadu where the installment was due for more than 6 months. Okay. Right. So now again they are talking, okay, what could be the possible amount classified as the NPA? Right. So for 5 lakh, is it to be classified as NPA? No, that 5 lakh, it is your income. So that is not to be classified as the NPA. Now, what does it say? Out of the 7 lakh, what does it say? Which is there of the government of the Tamil Nadu? Because central government guaranteed advances need not be treated as an NPA. But state government guaranteed advances have to be treated as an NPA. Right? So 7 lakh divided by 2, that is 3.5 lakh, which is to be classified as the NPA. 3.5 lakh, that is to be classified as the NPA. In NPA, sale to asset reconstruction company, right? Sales to the asset reconstruction company, what discrepancy auditor might have noticed? The NPA had not completed 30 months, sale was made without recourse, sale was made for cash, no, all that is fine. The profit of 2 lakh was taken to PNL. What did we say? That the profit should not be recognized and also the provision should not be reversed. Okay. And among the services to be provided to the startup company, providing which services would not lead to violation of the Chartered Accountants Act. So which services are allowed to be provided? So one, what did we say? Executive incentive plan and the wage incentive plan, price fixation and the other management decision making, but conducting a periodical audit for an advisor for tax matters, that is not allowed. So which of the following would not violation of the Chartered Accountants Act, it is 1 and 2, right? It is 1 and 2. It will not lead to the violation of the Chartered Accountants Act. Okay, right? So this is the discussion for the part 1 of the MCQ discussion series over here, right? So we've discussed like almost 1 hour and 12 minutes, right? So 1 hour 15 minutes approximately, wherein we have discussed these 7 case scenarios. Okay, right? So yeah, yes, please let me know in the comment section that whether you would want me to upload the videos for the further MCQ also. Okay, क्या है ना, जो students English बैकग्राउंड से पढ़ाई करना चाहते हैं, क्या उन्हें भी ये पर्टिकुलर वीडियोस बेनिफिशियल लग रहे हैं, कि क्या कोई दिक्कत हो रही है पढ़ने में, या कैसे वो चैनल पे कंटेंट देख रहे हैं और उनको क्या यूजफुल लग रहा है कंटेंट पढ़ने के लिए, और वो अपने फ्रेंड्स के साथ भी ये कंटेंट को शेयर कर रहे हैं। तो जैसे मुझे भी लगता है कि हाँ, अगर स्टूडेंट्स का इससे बेनिफिट होगा तो व्हाई शुड आई नॉट रिकॉर्ड दिस पर्टिकुलर कंटेंट, इफ आई कैन हैव अ मोर बेटर स्टूडेंट एंगेजमेंट विद द सेम. Okay, right? So yes, please pass on the word, please pass on the link for this particular video to more and more students so that they can also be benefited with this MCQ discussion series, right? So yes, wishing you all the very best and thank you so much for your patient listening. And let me know whether you want me to record the further MCQs also. Thank you.